What is going on, investors? Hopefully guys are doing well out there. It is time to talk about AT&T Incorporated, ticker symbol T. The company just reported their Q1 results, and we'll talk about them because it's a little bit complicated, okay? Normally with AT&T, pretty easy business, right? We would open up this chart. We would look at kind of the quarter over quarter, year over year results with AT&T. They had a lot of stuff going on. We focused on the cash flows. We focused on the debt over at AT&T. But as most of you know, this company separated from its Warner Media business, the HBOs, the CNNs, and that company combined with Discovery Channel. And a little over a week ago, these companies basically split apart. If you owned AT&T shares before the split, you saw that you got some shares awarded to you in your brokerage account of Warner Brothers Discovery. AT&T shareholders owned about 70% of this company. And then you notice that your AT&T stock basically fell in price to reflect the fact that it spun off, over a $50 billion business out of the company. Now, what we still know about AT&T is they have a pretty solid business, and I'll walk you through that. Now, unfortunately, with the financials, because they still mix in a little bit of Warner Media in here, I'll have to walk you through the slides. I'll get you to know what's going on over they call it standalone AT&T. This is your cell phone, this is your internet, and that's basically it. And we'll talk about that. We'll go through the numbers. We'll see the trends over here at AT&T. Since many of you bought into this company, maybe you bought into it when it was originally just standalone AT&T. They combined with Warner Brothers. Now they split. Now you're left with just AT&T, and you're kind of wondering where this company is. We'll walk you through all the slides and all the things that you need to know with AT&T. And then finally, we'll get over this from a technical perspective as well. Painting a pretty simple picture here. We'll talk about that as well from a technical perspective. But what we know about AT&T is we're still getting a 5.71% dividend yield. We're getting $1.11 per share on that dividend rate. Still very competitive, still one of the highest yielding stocks, quite frankly, out there. On top of that, if you held this stock before the split, you actually got amounted to a dividend with these Warner Brother and Discoveries. I believe I had about 40 shares of AT&T, and I got like over $200 or $300 worth of this new stock, WBD. And so certainly that's almost like a dividend payment because those shares were simply awarded to me in my brokerage account. Now, of course, your AT&T shares went down after that split off, but all things being considered, you still have equity, quite frankly, in two very solid companies. Now, if you've been following our channel for any length of time, you know that we typically bring up this financial chart with AT&T. We're not going to be able to do that for the most part today, so I'm going to walk you through these slides. Quite frankly, it probably look a little bit better here on YouTube. You had revenues, and I'm going to be talking about standalone AT&T. We'll do a separate video on Warner Brothers, although they revealed most of the financials in these documents, so you pretty much get an idea of how Warner Brothers has done over the last quarter or so, but we'll let them report their earnings. We'll come back and we'll do a separate video just on WBD stock. Now, in terms of standalone AT&T, again, this is just your fiber, this is your AT&T, this is your cell phone, this is your internet. We had $29.7 billion worth of revenue. It was $29 billion a year ago. Now, your adjusted EPS went from 58 cents up to 63 cents. I'll show you again. This company is paying $1.11 for a full year and on an adjusted basis. And again, I think we even see evidence when you don't adjust this number out. This company has actually plenty of earnings and plenty of cash flow to pay this dividend and actually raise it, where that was like somewhat in doubt before this spinoff. So it's actually pretty beneficial, in my opinion, for standalone AT&T. And then you get cash from operations actually dipping down. You went from 9.4 down to 7.7. We'll look at that here more in a second. Now, in terms of just the standalone business over at AT&T, you're left simply with mobility. That was up 5.5% year over year from $19 billion up to $20 billion in the quarter. Now, business wireline is still lagging, and you can probably drive around your neighborhoods and see all the commercial real estate that is for lease or for sale. And so that is short term. It's a headwind because we see it was down 6.7% from $6 billion down to 5.6, but it could eventually be a tailwind at some point once you get new businesses forming. And then on top of that, maybe a return to work renaissance. I know everybody is kind of staying at home, and that's certainly been kind of the quote new normal over the last 2 years. But my guess is businesses will shift back to office space, and convening at an office certainly could be a tailwind for business business wireline at some point. And then you have consumer internet as well, up 2% from 3 billion up to 3.1. You see on this segment, operating contribution, essentially profits, you were down essentially across the board except in consumer wireline, which is pretty small amount of profit, quite frankly. And we see here the contribution margin went from 7.4 down to 7 billion. So despite the increase in operating revenues, we saw profits decline a little bit, and mainly because that business wireline is a pretty profitable business, and it looks like their margins shrunk a little bit on that mobility side. Now, in terms of the growth that we're seeing over at AT&T, we talked about how they had this $29.7 billion worth of revenue. It was a $700 million over the previous quarter. We have that represented down here because the company reports actually $38 billion worth of revenue, but about 8.7 billion of that was this Warner Media business, which has more recently been spun off into its own stock. And so we had $29.7 billion worth of revenue. That was 2.5% year-over-year growth. And we see here on record, outside of a 2.2% growth back in December, it's actually the lowest growth that we've seen on a year-over-year basis for AT&T. So somewhat disappointing in that sense. But all things being considered, I think most investors are giving this stock a pass because it has been beaten down quite a bit, and we could bring them up. We could bring up the price to earnings, the price to sales. This company's got a $140 billion market cap on it, and quite frankly, pretty low multiple. And I think some of it had to do with the fact that you had this confusion with the stock and the spinoff and the dividends and all those types of things. And now all those things are starting to get worked out, and I think we can start to evaluate AT&T just on its own. Now, in terms of its subscriber gain, this is the key metric to watch now when it comes to AT&T. Not only the subscriber gains, they had net adds in the quarter of 691,000, but you also saw churn tick down a little bit over the previous quarter. It's back to what I would say more of a normalized level at 0.79%. So as long as you keep those net adds up and the churn low, this company should be well positioned. Now, you have AT&T Fiber. I'm actually one of these subscribers. I upgraded to AT&T Fiber over the last month or so, and it's just incredible, especially if you upload videos to YouTube like I do. It shortens the time quite a bit. Again, you're seeing this slowly, steadily climbing. I noticed in my neighborhood there was a bunch of AT&T trucks stringing line. I assumed it was fiber, and sure enough, a week or two later, they offered me the service. So they're obviously out trying to build out this service. You see really strong net adds in the most recent quarter at 289,000. They're up to 6.3 million subscribers when it comes to AT&T Fiber. And this was incredibly expensive. I'm paying like $180 a month. So it's at some point that's got to flow through at some point to AT&T. We have to assume they're spending lots of money because we looked at the segment results and we see consumer wireline down here just 317 million, just up 3.3%. My guess is because they're investing quite a bit of money in rolling out that segment of the business, the fiber line. And so it could be a while before we start seeing a little bit better profit margins from that business. Now, the other thing that was really important, and it's still important with AT&T, was their debt. But after closing this deal of the spinoff from Warner Brothers Discovery, AT&T received over $40 billion worth of cash. And after receiving that $40 billion in cash, they paid down $10 billion in bank loans just in April, and they're about to pay down another 12.5. And so we see here debt maturities over the next couple years. You have an accelerated payback in this most recent year of 17.5. It'll drop to just $7.5 billion in the upcoming quarter, or excuse me, the upcoming year with AT&T, and for the most part hang in that $7 to $10 billion range in terms of their debt maturities per year. And then certainly when we looked at this company's financials, and we see here cash flows from operations just in a quarter was up over $7.7 billion. Well, this company has plenty of money to not only fund this dividend, which is still a pretty healthy yield of over 5%, even factoring in inflation, that's not terrible. So they can fund the dividend over at AT&T, and they can much more comfortably fund this debt. Extremely much more healthy company, and I think an easier company for investors to understand. Now, is it as sexy as owning HBO and CNN and some of these other media rights? Well, no, not at all. But it certainly can have its place in your portfolio. These kind of rebuilding and cash flow generating businesses certainly can be beneficial. Now, from a technical perspective, I notice this thing's doing a little something similar, okay? We have some support for the shares down here at about $16 per share. I've got us on a weekly view just to give us a little clearer picture of what's going on. We're making what it appears to be some highs back in February of 2020. This thing was up at $24 per share. It made a lower set of highs in April of 2021, down here at about $23 per share. I don't think we're in the midst of making lower lows here. In fact, I actually think we're going to come back and retest this line up here, this trend line, and we'll see if this holds. This is a very flimsy line. It's just got 2 data points, but I could see AT&T coming back up into the over $21 per share range, and then all of a sudden meeting some resistance, because you did have some resistance for these shares back here, back in 2016 and 2017. Sellers just tended to show up at that $23 per share range. I could see AT&T rocking up into this area. If you've been wanting to exit out of this stock, if you don't want to be in it anymore, or you just want to take profits, well, as we continue to walk up, and the momentum is in AT&T shares. You see, after the spinoff, there was a little bit of a knee-jerk reaction, but it's really been spiking up ever since then. I believe after the spinoff, the stock was down here at about $18.50, $19 per share, and it's really just been momentum upwards with this stock. I think that continues. I think this stock continues to go higher, but the test will really be once you get close to about 22, more specifically, probably $23 per share. Can you bust up through that area, take out the previous sets of highs here, and really get some momentum on this stock? I think if you do, you're comfortably coming back to about $25 per share, and then you're having another test. Can you break essentially 2 all-time highs on this stock in the shorter term? That obviously is the incredibly bullish move. I think more than likely, I think we walk up here into the $22 per share, and then all of a sudden people start taking profits on this one. This one takes a step back, potentially retesting these $18, $19, maybe all the way back in a really bearish scenario, all the way back to 16. I think these are the areas where personally I would look to step in on AT&T, is actually south of the $19 per share range. That from a valuation perspective, I mean, look, the valuation probably doesn't get any lower on a stock like this. Your dividend yield is really nice. Am I being too greedy? Maybe. Am I a little bit biased because I already own shares of this company and I've already been in this stock for a long period of time? Maybe. So that might be skewing my view of the price action and how I view this stock. If you are not in this stock, you've never owned this stock, well, I tell you what, 5.7% dividend yield, a 7 or 8 times forward PE on this one certainly is extraordinarily well valued. And then as we showed you from a debt perspective, this company far more well positioned to cover those debt transactions, and the $40 billion it receives certainly will help this company in the coming years ahead. That was AT&T. A little bit simpler look into the company in the upcoming quarters. We'll be able to dive into the numbers a little bit better. We won't have to rely on these slides quite as much. We'll get just a standalone picture of AT&T. And like I said, I will do a video when Warner Brothers Discovery reports their earnings. We'll do a deep dive into that and take a look at that company as its own standalone entity. Hopefully you guys enjoyed today's video. Be back again soon with more. Good luck with your investments.